The following program is paid for by the Real Estate Radio Network.
You're listening to Real Estate Radio Fresno on 105.9 the FM KMJ. Now, live in studio, your host, local real estate expert, Craig Barton.
Good morning, Central Valley. I'm your host, Craig Barton, and welcome to the Real Estate Radio Network, the most important hour of radio each week, here on 105.9 the FM KMJ. Real Estate Radio is a show dedicated to bringing some rational thought to this crazy world that we live in and helping you to rebuild the Central Valley's housing and credit markets. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice, and that's exactly what you're going to hear every Sunday morning at 7 a.m. right here on 105.9 the FM KMJ. Thanks so much for joining us. Well, as always, Shell, well, first of all, let me say happy Memorial Day weekend.
Thank you. Thank you very much.
You are so subdued.
You know, you weren't even that nice to me on Mother's Day. But
I wasn't?
No, I don't think so. I'm like, really?
Oh.
I didn't get a special Mother's Day, but I got a special Memorial
Yes,
Day.
I did.
I have my flag hanging out.
You need to go back
so
and listen to our show on our website because it was way more. There was a hug in there somewhere.
Okay. I'm going to believe you.
As always, it is so good to have our special guest host, Michelle Pedescavalli, in the studio with us today. Michelle is a licensed realtor and a trusted friend.
Thanks for changing that up.
I told you I was going to change the copies.
I know. I like that. Thank you.
It didn't just go wrong in so many ways.
Yeah,
exactly.
I like it.
Well, the Real Estate Radio Network, Michelle, gives us the opportunity to reach so many people efficiently for one full hour each and every week. Our goal at the Real Estate Radio Network is to get you the timely and accurate truth about your local real estate market so we can help bring you
back home.
Atta girl.
I like that.
Good job. Good job.
Thanks.
Well, on today's show, we're going to take a closer look at something so many borrowers might think that's kind of an odd topic to talk about here in the Central Valley. Back in 2005, 6, 7, 8, it was pretty abundant. What we're talking about is non-conforming or jumbo financing. If you ever secured a mortgage that exceeded $417,000, well, you got jumbo financing. We've got mortgage advisor Tim O'Hare from Valley-Wide Homes here in the studio.
Good morning, Craig. Good morning, Michelle.
Good morning,
Good morning, Tim.
Thanks so much for getting up with us.
Love it.
Atta boy. Always good to have you back in the studio, Timmer. And if you're looking to purchase a home and need jumbo financing, we're going to take a closer look at what it takes for you. Actually, Tim is going to tell you what it takes for you to win in today's real estate market using jumbo financing. We're also going to take a look, a little bit of a curveball that we threw Tim this morning. He says on our way in, I didn't realize we were going to talk about refinancing as far as jumbo loans were concerned, but I think it's relevant. I think it's extremely important to talk about. We're going to take a closer look at homeowners that owe or borrowed more than $417,000 at one point when they purchased their home, or potentially maybe even refinanced, and now find themselves left out in the cold when they look for relief in terms of interest rate reduction or possible principal reduction. Well, make sure you stay with us. If you have any real estate or real estate financing related questions questions regarding the information that we share with you here on our showgram, as Michelle would call it. She hates when I call it showgram. Call us anytime on our off-air number at 800-979-3958. You can also check out our resources online, and you can also listen to past shows from the Real Estate Radio Network on YouTube by going to our website at reofresnohomes.com. Or you can use press 4 keyword
KMJ, call Valley-Wide,
to get connected to us anytime. We'd love to hear from you. Well, Michelle, you heard me use press 4 keyword. I am beating this horse to death.
Don't hurt the horse. Okay, you're talking about press 4?
Yeah, I'm talking about press 4. In other words, getting the message out as far as press 4 and how it can simplify.
You know, it's
your
funny
life.
that you say that because Tim asked me today, Michelle, I think I'm hooked up with press 4, but I'm not sure. Can you check it for me? I'm like, okay, first we had to get him off a dumb phone. Now, nonetheless.
Every time I'm on here,
Baby,
we're talking about
your dumb phone.
We do talk about your dumb phone.
You're getting a bad
I'm getting
rap
better.
there. You're getting better at it.
You know what?
It's okay.
I think people don't realize how effective press 4 is.
I understand. And I need to get on it. You're right.
Well, press 4 is for all those times that you're away from your computer and listening to our show. It helps us keep you connected. It also helps us share information with you regarding the topics that we're discussing, as well as helps to give you information and a link directly to our website. to help you stay connected. Just go to the Press4 website at Press4, that's PRESS, the number 4.com, and follow the easy setup instructions. During our show, you're going to hear us say things like, to call into the show, just use Press4 keyword
KMJ, call Craig.
And in this example, you will call directly into our show. One button really can do it all. Well, today's hot property, you know why it's a hot property, Michelle?
Why? Because I have a list a mile long of people calling?
That too.
Which I love. I got to talk to a bunch of them this week. Hey, guess what? That property's on the market now.
Yeah.
Come see it.
Yeah,
no, good times.
And not because it didn't have air conditioning when you did the open house, like last weekend.
Oh, those HUDs, boy, I tell you, some of them might get kind of warm.
Yeah, exactly. Well, today's hot property is a HUD home, as you would mention. And let's kind of regress or digress a little bit. HUD home, all it means is that property at one point had FHA financing on the property. The Department of Housing and Urban Development and the Federal Housing Administration actually insure or self-insure those loans. Helps to encourage home ownership, meaning that the original intent of FHA financing was to help borrowers not have to put 20, 30, 40, 50% down as they did back in the 30s, and help ensure that banks were able to lend at much higher loan-to-values, putting the minimum amount of monies down, which was 3.5% in this particular instance. And unfortunately, along the way, the folks that owned the property lost the property. Their lender, let's say their lender was Bank of America, took the property back through the process of judicial foreclosure, then files an insurance claim with HUD.
So when somebody asks me if this is bank owned, I'm saying yes because it is. But then I'm thinking, as you're saying this, maybe technically, do I consider it a HUD?
Well,
technically a bank owned property?
It is a foreclosure, but it is not owned by a bank. The Department of Housing and Urban Development is actually the legal owner of the property.
Which is a governmental entity.
Exactly.
Okay.
And now they are marketing this particular property as a HUD home. Well, this property address is 2935 East Emerald Avenue, Fresno, California, 93720. Great little neighborhood. It is a Brentwood neighborhood. 3-bedroom, 2-bath. 1,700 square feet, built in 2003. This home is located near the major cross streets of Willow and Perrin, Clovis Unified Schools, and was recently appraised for $195,000. Just so happens the appraised value is also the list price. And if the buyer is utilizing FHA financing, it will save them up to somewhere in the ballpark of $400 to $450 as far as the appraisal is concerned. The bidding deadline on this particular property is May 28th at 11:59 Central Standard Time. If you'd like more information about today's hot property, please give us a call anytime on our off-air number at 800-979-3958 or use Press4 keyword
KMJ Hot Property.
And we'll send you more information about this hot property right to your phone. Look for more hot properties each week right here on the Real Estate Radio Network. Well, now here comes your favorite segment, Michelle. Find your new home.
Okay.
How's that working for you?
Well, you scared me for a minute. I'm like, oh my gosh, am I missing something?
Okay, now which segment? Because
which
they're all your
segment? I'm like, wait, hot property's my favorite.
Right. Well, first question is.
So, Find Your New Home is my favorite segment because I get to talk to more people that way.
Almost definitely.
I'm selfish. I like it. I'm greedy. I want to talk to people.
You do like to talk, too.
I do. Just a little bit.
No, really. No, really.
I told you. Yeah.
It's so hard to slow her roll. Even today, I can tell you, your chin is quivering. You are holding yourself back so much. Oh, my goodness. Well, the big question is, how do you go about searching for your new home? Also, and this is one of the things that we had not incorporated into this particular segment in the past, how do you search for your next investment property? If you're looking for a single-family residence or duplex, triplex, or fourplex, up to 4 units is still considered single-family and falls under Fannie Mae and Freddie Mac guidelines. How do you really go about searching for that new investment property or that new home that you're going to occupy?
How do you do it, Tim?
Probably old school, just drive around the neighborhoods.
Wow.
But we all know
we've got to help.
Boy, did you
know there's a better way
with
to
me,
do it.
Timmers.
You read ahead, right?
He's reading the notes ahead
No, I
of the
didn't.
show.
Is that what?
Okay, no, you're going to call me, Tim, and I'm going to hook you up with a search based on zip code, based on
I
property
heard you the
type.
other day make a comment to a client, and you put it really well. There is a more efficient way to help you search for a new home. All you need to do is allow me to set up for you Go ahead, finish it.
Set up a portal for you based on your criteria of what you would like to be searching for, whether it's area, zip code, size, etc., or all those things.
Schools, yeah.
So that you're only seeing the properties that make sense for what you're looking for. Additionally, you're going to see them live, real time, as they go onto the market.
As they come active.
And as their statuses change, which educates you, the consumer, as to how fast or slow things are moving. And what's available out there for real. Exactly. So that when you're driving around, you know whether or not that particular property is pending or active.
And who wants to spend money on gas nowadays?
No kidding.
Well, and the other thing, let's throw this out as well, is, Michelle, you mentioned in last week's show you've got some clients that are from Georgia. Is that okay? That they don't have the perspective as far as how quickly properties move in this particular market. So getting the opportunity to see, this came on, let's say it came active on a Friday. Monday you see it. Tuesday morning it's
sold.
It's pending.
Right.
And that helps to give you the perspective. Proof's in the pudding. So you're able to tell them, okay, here's the situation. Stuff goes fast. And you've got to be prepared to act fast. So the moment I would most definitely you should be reviewing your emails on a daily basis, excluding those properties or rejecting those properties that don't fit your criteria or that you don't like, driving the ones that you do like immediately. And then scheduling showings immediately as well.
And actually, Michelle, you had a very good point with someone, too, that I overheard you talking to them about was...
I must be talking to a lot of people to hear both of you over here.
No, but you said go take a look at this house at nighttime and see what the neighborhood is like at nighttime as opposed to...
That's critical. It really is critical.
I think folks need to know if they really want to raise families in a particular neighborhood, they need to see what that neighborhood's like daytime and nighttime. And generally, we're showing in the daytime if we can.
Right.
So they need to drive that in the later hours of the evening prior to making their offer and making sure that's what they want to raise children in and that they're comfortable in that area.
Certainly.
And that would go for any area of town. The other thing that I would mention is last Sunday after the show, I showed some 7 houses, I think, to a particular person who'd picked out those 7 houses to look at. And we took a look at them, and I said to them, versus waiting and dialing them all in and showing them all in one day, be aware. If you see a property come up, same day, drive it, call me. Let's see it same day.
Right.
You're going to have more available to you, potentially. It's great if they can do 7 at a time, but in this market, you're not necessarily... You're going to get the last of the last when you're doing 7 at a time.
It is not, let's get this out of the way, it is not always going to wait when you see a property on Monday.
Right.
Well, I'll just save that in my portal for this coming Sunday. That's not...
And their favorite
approach is not going to work.
Their favorite came on the market the day we were looking.
Yeah.
And that's because that was the best property available.
What's the other key, too?
Okay, you guys are scaring me. You guys, I feel like I'm on a quiz.
No,
here. What's the other key?
Get pre-approved for a
Oh, no, absolutely, yeah. I have that conversation with them. Before we can make any offers, we have to have approval in place because it's pointless for us to go look if you don't have one in place.
Right.
You're going to fall in love with something and then we're not going to get it and you're going to be very disappointed.
And I say worse yet, you also may be required to get pre-approved with a specific lender, Bank of America, Chase, or a specific local mortgage banker because that's a requirement of the seller. So having all your documentation together so that you can forward a complete package to that lender so they can issue that pre-approval in a timely fashion gives you a leg up as far as the market's concerned. If you're not ready to swim that current,
stay away from the water.
Yeah, stay away from the water. And it's not because we're trying to push you to buy. That's not the case. If you're ready to buy, there's certain things you need to take care of before you actually initiate the process. And as Tim had mentioned, first thing is get yourself pre-approved. Secondarily, that also helps you to set the right expectation in terms of payment, in terms of down payment, and also in terms of not what your max is, but what your max in terms of what you feel comfortable with.
Always.
And then setting up the portal. And don't set the portal up until you're done with your pre-approval. Now, some agents may...
I will.
You're
admit.
a softie.
I do. You know why? Because some people don't... They start to see them, and it gives them more... To me, it gives them a motivation to get pre-approved.
I see both sides of the coin, yeah.
But, without a pre-approval, it's like going on vacation without packing your suitcase or putting gas in the tank.
Yeah,
You can't go very far without it.
Yeah.
Well, I tell you what, Michelle can show you an easier way. If you'd like us to help, just go to our website at reofresnohomes.com, and we'd be happy to help set up a search for you. Or you can call us anytime on our off-air number at 800-979-3958. or use press 4 keyword.
KMJ, call Valleywide.
And we will have Michelle set or show you how to simplify the home search.
Well, you're sure scaring them with me, aren't you? Michelle will do this. Michelle will do that.
I'm just I'm really pushing.
I better
Michelle
get ready,
on
huh?
Yeah. Michelle says your papers are not in order. Well, a quick short sale update. We talked about short sales in our show last week,
Yeah.
the week before, and the week before that. Quick short sale update. Have a client, and let's do a little storytelling here. I have a client that actually is in the process. Home has been listed.
Okay, wait.
Okay.
In the process, they are the seller or the purchaser?
They are the seller.
Okay, thank you.
Okay. Yes.
Sorry, clarity. I'm all about clarity.
You're all about clarity. Property is listed. Property is in contract. So we have someone that has tendered an offer to us. The seller, my clients, have accepted the offer. Now, being that they owe more than what the property is worth, the short sale or hardship package has been presented along with the offer to the lien holders. And in this particular instance, there are 2 lien holders. Well, communication had kind of waned over the last, say, 10 days. And I was kind of curious, well, why has it kind of waned? So I get a phone call.
With who?
With the communication has waned with the first lien holder on the property. Excuse me.
The person you've been
and the
talking
negotiator that represents the first lien holder. So this morning, I get a phone call from the husband, the seller, and he says, "So, how's things going?" Great. And I talked about, just get you an update as far as where we're at. And he goes, "Well, let me tell you where I'm at." He goes, "I got a letter from GMAC."
Interesting.
Now, GMAC was originally the one that offered relocation assistance. When I say relocation assistance, anyone that is within earshot of their radio and listening to our show this morning, relocation assistance is this. The lien holder or lien holders of your mortgages on your property agree to pay you a sum of, typically I would say at least $3,000 to relocate, to assist you in relocating. It does not happen until the short sale closes, so it is agreed upon at close that those monies go to the seller.
Is that dependent upon the loan size, or does that not matter?
No, and that's a really good question, Timmer, because on the show, 5 or 6 weeks ago, I had a demand, or actually a short sale approval notice from a servicer. And it was a $135,000 sales price, and the amount of monies that was going to the seller was $23,000.
Wow!
So we had talked quite a while back that there was a pilot program with a number of different lenders to pay more. It was an incentive to those folks to, hey,
Maintain the property.
Exactly. So
Don't steal the stove.
Yeah.
Things like that.
Let the concrete stay.
Yeah.
Yeah, exactly. Don't pour concrete down the toilet or down the pipes.
No, leave the copper wire alone. It's not worth it.
Yeah.
You have to peel it.
So what my seller communicated to me this morning is we got a letter from GMAC. Now, GMAC is also, just for clarity, one of the, now Ally Bank, one of the 5 not plaintiffs, but they were the ones that got sued by the federal government. They settled with the federal government. That's part of the $26 billion federal settlement, 49 states attorneys generals within the last 90 days. And they sent a letter out kind of backdooring the transaction. And not that it's a bad thing, but they sent out a tease. And, Tim, that's exactly what you called it.
Yeah.
Said, hey, your payment, we can reduce your payment to $1,500 with no terms.
What do you mean with no terms?
No terms.
They didn't state the terms?
Didn't state the terms. Okay. And also, we will allow you, keep in mind, GMAC is the first lien holder, Wells Fargo is the second lien holder. We will also allow you to pay no interest payments on your second. So he calls me up and says, hey, what should I do? And I said, well, you got to call him because the devil's in the details. You've got to find out exactly what. So what are the terms of this?
Right.
Does not include taxes and insurances. What's the underlying balance, or what's the, at the end of the day?
How many months, at what interest rate does this $1,500
Is it
equal?
fixed? Is it variable?
Sure.
Are you reducing my principal balance on the loan? What is this just prolonging
really
the inevitable? It is. But what bothers me, I think, more is, number one, it needs to be in the best interest of the consumer.
Sure.
I don't get the warm and fuzzies when you're talking about a tease, where they're sending something out, really trying to get you to call. And it's somewhat vague.
Yeah, sounds very vague.
I don't. What are the disclosure requirements from the
For these
Consumer Finance
institutions?
Protection Bureau for short sales? Well, there are none. for offers that you receive from your servicer. There are none. You would think that there are, but obviously in this particular instance, there is not.
So is he supposed to sign, call? What are they asking?
He needs to call. And I told him, you've got to call. You've got to call and you've got to get the terms, because if it makes sense for you, then what we do is we cancel the transaction and move on down the road.
Right.
But it does have to make sense in terms of, at the end of the day, do you owe $450 on a house that is really worth $280? And does that make sense for you? Is this an adjustable rate mortgage that's going to be fixed for 5 years or fixed for 3 years and then begin to level up to a much higher rate, or whatever the situation is? But you don't know until you actually call.
Yeah, and I had heard with one client that was looking into something like that as well. As what they did was they reduced their payments by, say, $400 a month, and then when they sent out the offer, what they did was they tacked on that extra $400 that they were not paying for 30 years as a balloon payment.
Wow.
So,
you kind of want to know about those.
Yeah, so I mean, we've talked about this before, this industry is making history every single day.
Yeah.
You just need to,
certainly.
got to be careful with what you're
agreeing to.
And if you have received an offer, if you're one of our listeners and you have received an offer, it's extremely important. Get that offer to us. If you'd like us to go through it with a fine-tooth comb and dissect it for you, please contact us.
Well, we've seen, 3 or 4 different samples that folks have sent us as of yet, and they're all very different. I mean, some are sign here. I mean, they actually give you a signature
That was
spot.
the one that I received from my client.
Chase, So, I mean, I'd be really interested to see what the public's receiving right now in regards to these settlements.
Most certainly. And if you do have questions regarding a short sale or how to navigate the minefield as far as a short sale is concerned, or to help you through the process in terms of an offer that you do receive, again, don't hesitate to call us anytime on our off-air number at 800-979-3958, or you can check out our resources online at reofresnohomes.com. Well, after the break, we are going to take a closer look at some of the top stories in today's news. You are not going to want to miss this. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valley White help. Valley White Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free 800-979-3958 and put the seasoned professionals at Valley White Homes to work for you. Valley White Homes, NMLS number 342062, 235-952, California Department of Real Estate License 0122-8460.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
We told you before the break we were going to take a look at some of the hot stories or top stories in the news. This is actually a story brought to us by Timmer, our very own Timmer O'Hare, mortgage advisor with Valley White Homes. Again, Timmer, thank you so much for getting up with us.
You're very welcome. I love being here.
Yeah, we were talking before the break about receiving offers in the mail, and the specific example we gave was talking about a short sale, a client that was in the process of negotiating a short sale and received an offer from their lien holder about how to repackage the mortgage or modify the mortgage. Well, Tim, this is something that you had actually received from a client who shall remain nameless.
Right.
But it was, talk about it real quickly in terms of...
Yeah, I was looking into doing a refinance for them. They were an adjustable rate mortgage, pretty high interest rate at the time, and wanted to see what options that they had available. And I was doing my research as far as loans that were available to them, and during the process, they had not paid for an appraisal at that point. That was the biggest question, was the value there to be able to do something.
The property going to appraise to
Right.
allow them to go through the process of actually
Exactly. So, it's a small investment, $400 or $500, and they weren't quite sure, and we were trying to do the research on the values. And in the meantime, they got a letter in the mail from Chase. And I said, I'd like to take a look at this letter to see what it is.
Please share.
Yeah. So they thought it was a little bit too good to be true, and I said, I don't know with the lawsuit that took effect. Let me take a look at it and see what it is. And sure enough, it came across. There was a one-page document reducing their interest rate from 6.5% adjustable into I can't remember
5.25%.
5.25%. Yeah, 5.25% fixed rate for 30 years. So.
Important to note, Chase was part of that
Settlement,
exactly. Yeah. And part of their homework that they needed to take care of was modification of terms on existing loans. These folks, and just to clarify, these folks were current on their mortgage prior to receiving this offer. And
in fact, they're still trying to pursue a refinance to see if they might even get it lower. Gotcha. But I said, in my opinion, I would take advantage of this situation now, because if it runs out, my understanding is they only have so much money in the bank that they're going to be able to give away to the clients.
Sure.
So if they don't take that opportunity at this point in time, they may not see that opportunity.
Yeah. You miss it.
So why not take
limited
advantage
time offers? Some restrictions do apply.
Yeah.
Right. So what your recommendation was in this situation was take what they're offering.
Right.
And then evaluate at a later date if you need to.
No, my recommendation was take this now.
Right.
We can still look at seeing if we might be able to get you an even better deal.
Okay.
I'm not saying that I can or I cannot for that client, but at least I know I've got them locked into something that was better than what they were before.
Right. So they've gotten some relief.
Well, for them, it was a pretty substantial.
It was $500 almost on the payment.
The reduction.
And it was fixed.
Yeah.
No more adjusting.
$429. That's significant.
Mm-hmm.
This is slightly in excess of a 10% reduction in their monthly principal and interest payment.
Yeah.
And going from an adjustable rate mortgage
into
a fixed rate mortgage.
Right.
So just to say real quick, where is my piece of the settlement if my loan is currently owned or serviced by Bank of America, Citi, Chase, Wells Fargo, or GMAC, currently Ally Bank? Mm-hmm. Where is my piece of that settlement? If you're not current, you need to call. If you are current, you need to call.
Right.
You need to, and every single listener that calls into the show that I talk to, you need to make sure that you take copious notes. You need to make sure also that you're very persistent, very diligent in terms of speaking with someone that's able to give you, quote unquote, your right answer.
Right.
And don't stop asking.
Yeah.
Do not stop asking, because the landscape changes on a daily basis. A month ago, we said it's going to take some time for this to trickle down to market level where we actually see.
Well, and in fact, this is not supposed to go into effect until June 1.
Well, there you go.
So they're getting an early lead on it.
Well, there you go. We also, in the news, B of A begins contacting distressed homeowners about principal cuts. As part of as part of a foreclosure abuse settlement, the one that we were talking about, the bank has started notifying about 200,000 borrowers that they may qualify for reductions of as much as $100,000 on their mortgage balances. Again, where's my piece of that? I'm not talking to me specifically.
Right. But as a consumer.
As a consumer, if your mortgage is serviced or owned by one of those folks, you've got to be calling and asking.
Well, in addition to that, it's not the topic today, but we can also find out, do you own a Fannie Mae or a Freddie Mac loan, which is a whole other possibility for you too. So,
certainly.
Right.
These 5 are able to take care of their house.
Right.
If your mortgage is serviced by another entity, then contact us or contact Timmer.
Right.
And we will help you determine whether your mortgage is owned by Fannie Mae or Freddie Mac, and we'll talk about this, HARP 2.0, Home Affordable Refinance Program, which allows unlimited loan to values as long as your mortgage is owned by Fannie Mae or Freddie Mac, and helping, hopefully, to give you a reduction as far as your monthly payment's concerned.
Sure.
Doesn't mean that it's going to give you a principal reduction, but hopefully help you as far as your monthly payment's concerned.
Yeah.
And again, if you have any real estate or real estate financing related questions or questions regarding the information that we cover here on the show, we would love to hear from you. Call us anytime on our off-air number at 800-979-3958. You can also check out our resources online, and you can listen to past shows from the Real Estate Radio Network on YouTube by going to our website at reofresnohomes.com. Or you can use press 4 keyword
KMJ, call Valleywide,
to get connected to us anytime. Well, right at the moment, we are going to transition to something a little bit different. We talked about at the beginning of the show. We're going to talk about non-conforming or jumbo financing. If you ever secured a loan that was over $417,000, well, that is jumbo financing. We've got mortgage advisor Tim O'Hare from Valleywide Homes here in the studio with us this morning to help take us through the process as far as, Tim, what is a doggone jumbo loan?
Well, first and foremost, you just said it. Anything above $417,000.
Give it away again.
Is that county driven? No, is that state driven?
That is the conforming loan limit. Is $417,000 is conforming. Above that, it's non-conforming.
And I asked that because,
but actually, that's a good question because there is what they call high balance loan, which is different than jumbo financing. High balance has to do with FHA lending in specific counties.
Okay, so that's
increasing that FHA loan limit
correct.
in those particular counties.
You know, your Los Angeles, San Diego, San Francisco, Marin, those counties are
the
obviously
higher dollar
higher,
counties.
Yeah, they're going to have a higher limit on the high balance. But the jumbo loan is
417 there as well. In those areas or no?
Conventional financing, statewide, countrywide,
okay.
The conforming loan limit is 417. Okay. So anything 417 and below is considered a conventional loan. Those loans are all underwritten to Fannie Mae and Freddie Mac's guidelines and run through one of two automated underwriting engines, desktop originator or desktop underwriter. Anything in excess of 417 is considered jumbo or non-conforming.
And I was trying to clarify because I know 417 in California seems, that's probably, jumbo.
Pretty decent size.
Here in the Valley, that's pretty decent size.
In
other states, that seems astronomical for what we hear pricing to be, say, in Texas, say in other states. So that's why I was trying to clarify if it's just California or if it's everywhere. It's everywhere.
No.
Okay,
It's everywhere.
Cool, thanks.
Yep. Most definitely. So anything in excess of 417. So, and I made mention of it earlier, 2005, 2006, 2007, there wasn't a whole lot of stuff out there that wasn't jumbo in terms of what you borrowed, because for a 3,000 square foot home, easily your sales price was in excess of 400, easily north of 400.
Right, and most people weren't putting 20% down back then.
Good old subprime, Tim.
Oh yeah, yeah. But the jumbo is, typically what I see is above 417 up to $2 million on limits. There are obviously lenders out there that do higher than that.
Sure.
And of course, I would love to get some of those deals, but realistically, we don't live in an area that really is going to have that type of loan financing.
Not on residential.
Our
not
bread
on
and butter
generally.
is not, is typically FHA here in the Central Valley, I would say right at the moment.
Yeah.
Anything that is jumbo, though, because it's not, quote-unquote, what you would commonly run into or what you might see as far as normal.
Well, here's something that the Valley probably would look into, and I think as far as using jumbo financing is second homes or vacation homes over the coast up in Best Lake, Schaefer Lake, something like that. So, if you are looking for a second home, you can afford the payment on both of those. Obviously, you got to get qualified, make sure that everything's copacetic that way. Those loans are available for our clients in this area as well too.
Okay.
So
and the number one place that I've seen them is custom construction. You
great example.
Takeout loan to include that land in the financing at the end and whatnot.
Right.
That's why I see them used a lot.
So you can use jumbo financing to purchase, refinance. It could be a primary residence, second home, or a vacation home.
Correct.
You brought up a very good point. Obviously, over on the coast, prices values are much, much higher. So let's talk about some of the basic criteria. You said up to $2 million if they so need.
Right.
But typically, what are you talking about in terms of down payment? What are you seeing out there? Because obviously, there's so many different investors out there.
Yeah. The lowest that I found was 10% down payment.
Gotcha.
10%.
10%. Okay. Now, of that 10%, though, 5% of it only needed to be from the actual buyer or borrower. So the other 5% actually can be from a gift source.
Gotcha.
Really?
So, yeah.
Interesting. Okay.
So that is typical. That is almost the same as a FHA loan.
That
and
is.
You can get gift financing as well, too. The loan limits for that 10% down, though, does come into play a little bit more. You can only go from $417,01 up to $625,000.
Question: does that person, the gift, is it a true gift, or do they have to be on the mortgage as well?
No, it's a true
no.
gift.
Just
Yeah.
not a co-borrower. Okay.
No, it's
Just
true
a
gift.
question.
Yeah, I just want to clarify because I know we do have that situation a lot when you look at families purchasing homes at the beach and whatnot. A lot of families will go together. I just wonder if that was a requirement.
The other thing that comes into play as far as qualifying is when you only put 10% down or 15%, anything less than 20%, you're going to have the mortgage insurance on
Right,
it,
I
which
was
is
just gonna
going to be
ask.
very costly for a jumbo loan. So if they do have the opportunity to have that 20% down, obviously they're going to save a lot of money.
Best way to go.
Yeah.
Certainly.
Is it the same ratio, 1.25%? Or somewhere in that
No.
area? It's a higher MI
It's higher
ratio.
MI. There's only a few companies that actually do it.
Okay.
And then it is dependent upon the customer's credit score, what the
Gotcha.
down payment is.
There's a lot of variables to that.
There's more variables, yeah. So I can't give you a clear cut. Here's your answer.
Yeah, how
for
come?
that.
Come on,
You got to be a
Tim.
little.
I'm here for clarity.
You got to be a little. How's this for clarity? You got to be a little taller and a lot more bulletproof.
Yeah, I'm thinking so.
Whether and also there's requirements in terms of credit scores, correct, Timmer?
Yeah.
Touch that real quickly in terms of
700 minimum.
Gotcha.
Okay.
Yeah, 740 is going to give you the best.
Whereas what
deal.
you're seeing right at the moment, say with FHA financing as an example, you're able to see most commonly throughout the industry roughly about 640.
That's what I would say. Yeah.
Conventional financing minimum credit score is 620. So anything below that, there's some investors that will go below that, but it's not common every day that you would see.
Yeah, and it's not going to be for your jumbo market either.
Right.
You know, the credit scores are much. And the other thing that's much more prevalent that's needed is reserves assets. So, whereas an FHA loan, you don't really have to show.
Is that the kind of reserves like your grandma made? Oh, that's preserves.
That's preserves,
Oh,
strawberry.
geez, I'm so sorry.
My favorite.
Well, I found
was a great cook,
I
wasn't
found some of them as high as 6 months reserves, also up to 12 months reserves,
Wow.
depending
So
on the
6 to
lender.
12.
Yeah.
So common when you're also talking, I don't mean to bleed the picture here, but also when you're talking reserve, I'm a bleeder, right?
No, but I mean investment. We're talking
Investment
very
property.
comparable.
If it were an investment property purchase, let's say,
Right.
and below conforming loan limits are below 417 or below, Fannie and Freddie would require 6 months PITI reserves
Right.
for all mortgage payments.
Very good point.
Very good point. So if
Yeah.
you have,
It's not just the property you're buying.
Right.
It's
So
a small
if you have
property.
5 houses, they all have to have 6 months of
Correct.
reserves, correct?
And does the same hold true, Timmer, in terms of reserves for jumbo financing?
They do.
That it's all mortgage payments.
All mortgage payments.
So you've got to have a pretty big safety net out there when you're talking
Yeah.
jumbo financing.
And it can be 401k, can be stocks, that type of thing. So it's not just liquid assets in your
Right.
checking and savings account.
Right,
But,
right.
it's a different animal, different type of borrow typically. A little bit more educated, I think, maybe.
Sure.
A little better credit standards, obviously.
Right.
Yeah, it's a good program, though. I mean, if you want to buy I've thought about if you bought a house over the beach, if you could rent that thing out for, close to making your house payment, it's a good way to build up some equity.
I tell you what, another brief, quick story. Had some clients that live up in Oakhurst, and they bought a duplex over on the coast. Actually, they procured it via foreclosure. And so that particular property over in Pismo is making per unit a month $2,200 per unit.
Wow.
That's
a
nice.
month. They are just crushing it.
So someone's buying their vacation home for them.
Yeah, exactly.
Well, and
Yeah.
see, I'm selfish. I'm thinking, why didn't they keep one side for themselves? Because they get Pismo all the time.
well, I mean, seriously, let's talk about that real quick.
the
I think
ROI doesn't make sense for them, probably.
Let's put it this way: if you buy a cabin up at Bass Lake, or you buy a home over on the coast at Pismo, let's say, and you end up paying $600,000 for a little 1,400 square foot or whatever it might be,
Right.
you have to learn. You really have to figure out there is a way to leverage that particular property. There's a number of vacation rental properties where you can do your homework over on the coast to say, okay, well, what could I or should I expect based upon this criteria? I've got, and it goes just like this: square footage. Well, first of all, how many does it sleep?
Yeah.
It sleeps 8. Okay, well, where's it located? Oh, okay. Well, if it sleeps 8 and it's located there, then you should be able to garner, here's peak, here's off season, here's weekend, here's if you want to rent it a week at a time. And let me tell you, you can take that vacation calendar, you can leave some spots open for you and your family 4 or 5 times a year.
Right.
And the rest of the time, you can leverage the heck out of that sucker, and they'll help you to maintain it. They'll send a cleaning crew in after you're done as far as the folks that are renting it.
Yeah. You're getting something to pay for it.
So your client isn't renting it out to like a student or somebody who's living there. It is vacation. It's true vacation.
I do have to throw one small caution in the wind on that, though. Sorry to be the...
Really? You have to bear some bad news?
Sorry to be
Gosh, Tim.
But if you truly buy it as a second home, vacation home, you cannot have it as an investment as well. So as far as the
vacation home / investment. Okay, which one were you speaking of? Now you've got me confused.
No, what I'm saying is you can get financing on the jumbo loan for either one of those products.
Okay, you can. Okay.
But
be honest about what it is.
Right, because what happens is if you claim that on your income taxes, and if you bought the home originally as a vacation home, it truly has to be a vacation home. You cannot rent it out.
Gotcha.
So then it's considered an investment property, and then you follow
Yeah. Got to play by the rules, is what you're saying? Yeah. People have to learn that.
That's what got us in. What do you say? That's what got us into this mess.
But you can still do the jumbo financing for that type of a product if you wanted to do it. Just a little bit more of a down payment would be all.
Wow.
Okay, so a larger down payment is going to be required on that. Okay.
What do you see in terms of jumbo financing as far as fixed rate, adjustable rate mortgages? What kind of cross section of products
you can do a 5-1 arm, 7-1 arm, 10-1 arm, 30-year fixed, 15-year.
5-1, 7-1, 10-1, the 5 means that is the term of the arm where it is
fixed
for
the first 5 years. So I think rates this morning that I looked up were 2.875 on a 5-1 arm.
And your APR would be higher. It would be somewhere north of 3% or something like that. Gotcha.
Yeah. And then so you're fixed for the first 5 years. After that 5 years, depending on the adjustment, it can either be 2% for the first year, with a 5% lifetime cap and a 2% thereafter.
5% lifetime cap. That's nice and comfortable. I mean, really, when you think of it, 5%'s not. I mean, if that's the cap, that's not bad. Those are great rates. In today's market, it doesn't sound great, but really, come on, 5% is a great rate. Let's be honest.
Depending on
that's a 5% cap over and above your initial start rate,
which was 2.87.
Okay,
so you're
going to
less than 8 still.
You're going to be going up to 8.
Okay, maybe I'm just.
It's what you can afford and what you're comfortable with.
Well, right, but I'm just saying when we talk about the rate adjustments that people have gone through most recently, they may have signed at an 8%, guys, and now they've adjusted and they're
13.
Yeah, exactly. So when you talk 8% being the cap, I still think that's economical. When I bought my first house, let me just throw it out here. When I bought my first house in 1992 or 93, I can't recall which year, I took all the paperwork to my daddy because he was my best friend, and I said, Dad, what do you think? And he says, "What are the rates? Okay, all right. You're going to start at this, and it's the builder's buying it down. Okay, what do you top 8%? 8%. That's great. Take it. You're good." Da-da-da-da. Because he lived in the 80s when it was 18%.
Yeah.
So I'm just saying. I mean, when you look at the big picture, 8% is really not a bad rate.
It's what you're comfortable with.
Sure.
Yeah, exactly.
And the other thing as well is, are you still able to cash flow the property at that point? Rents are what they are, and especially over on the coast.
Yeah.
It would be interesting just to take a look at trends as far as rents in Pismo for that particular property, Sleeps 8, located in that particular location, and see, so what have they trended over the last 10, 15 years? And let me tell you, I bet you they've been pretty doggone
There's a lot of valley people who hang out in Pismo, man.
Yep.
As my ex-wife called it, Portuguese paradise. Yes.
That's cute.
So talking about credit scores again, Timmer, you said typically a minimum credit score of 740.
No, 700.
Oh, 700, excuse me.
Yeah.
Talk about also the credit requirements if a buyer has had a bankruptcy or a foreclosure or a short sale. How does that exclude them, or how long do they have to wait before they can purchase a property using jumbo financing?
Depending on the bankruptcy type, you've got 7 and a 13 are typical for individuals.
And 7, just to clarify, 7 is a complete walk away.
Walk away from everything that's unsecured.
And 13 is a reorganization.
Exactly. You're going to pay back to the trustee to the payment plan.
Gotcha.
So on a Chapter 7 bankruptcy, it's a minimum 4 years since the discharge date. And on a Chapter 13, it's going to be 2 years after the discharge date. So on a Chapter 13 plan, sometimes those plans might be for 2, 3, 4 years. So the total time period that they're in bankruptcy is 4 years plus another 2.
Gotcha.
So either way, you can still get financing with the bankruptcy. It's just the time period that we got to look at.
It's a waiting period.
Yeah.
And you need to be rebuilding during the waiting period, correct?
Now,
Isn't that the truth?
if you've got a foreclosure, it's 7 years. There's no exceptions.
Okay.
So that one's pretty clear and cut.
Okay.
Yeah.
Gotcha. Well, let's do this, guys. Let's take a break real quick. If you have any real estate or real estate financing related questions or questions for us regarding the information that we cover here on the show, we would love to hear from you. Call us anytime on our off-air number at 800-979-3958 or check out our resources online. And you can also listen to past shows from the Real Estate Radio Network on YouTube by going to our website at reofresnohomes.com or just press for a keyword
KMJ, call Valleywide.
to get connected to us anytime. Well, we're going to continue our conversation on the other side of the break about jumbo or non-conforming financing. We'll finish up with purchasing, refinancing your primary residence, second home, investment property, but then we're going to put a little twist in there in terms of what if you owe more than what your home is worth and you have a loan that's in excess of $417 in today's market. Stay right here. You're not going to want to miss this. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
All it takes is one call to the professionals at Valleywide Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing investment property, let the experts at Valleywide Homes help. There's never been a better time to get into the real estate market. Visit our website at reofresnohomes.com or call toll-free 800-979-3958. That's 800-979-3958. And put the seasoned professionals of Valleywide Homes to work for you.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, before the break, we were talking with Tim O'Hare, mortgage advisor from Valleywide Homes. Did you know you're a good advisor, Timmer?
Thank you very much. I appreciate
You
that.
give great advice, buddy. I enjoy working with you. How long have we known each other, by the way?
I don't know. Probably
A long doggone time, huh?
I would say at least 12 years.
Yeah.
You guys are way old. Oh, did I say that? I'm sorry.
We just started young.
Yeah. You know, I sold my first home when I was 12.
Really? Mm-hmm. Yesterday?
I was in,
yeah.
wow.
Whatever.
I'm in sales. I'm not in just.
Sell it harder because I didn't sell me.
Oh, wow. Great. Thank you. So we were talking with Tim about jumbo financing. Still, there is need in the Valley as far as jumbo financing is concerned. Wouldn't you agree, Timmer?
Absolutely.
Yeah.
Yeah. I mean, there's listings out there for sure.
Certainly.
And like you said, refinancing as well, too. You know,
Sure.
Those people, we still want to talk to them.
The hardest part, probably for most of those potential buyers, is finding comparables. In today's market, you've got
True.
to work a little, if you are an appraiser, you've got to work a little bit harder. And what we mean by comparables is the proximity to your home. Same or
styles,
as close
square
to
footage.
Exactly, as close to square footage, amenities, lot size, age of the property that has transferred, sold within the last typically 90 days.
Right.
That gives a fair estimation of market value to your property, and that's probably the hardest part, just because the appraiser's got to travel a little bit to.
Well, and I think too is that you're also looking, as we all are, the short sales and the foreclosures that are going on.
Right.
So that's kind of affecting the jumbo market as well, too. Can they refinance? Because their neighbor walked away and the house ended up going to foreclosure.
Right.
And what was worth $500,000, they sold it for $300,000. So.
Well, and I think we're seeing some settling now. I mean, I think here in the Valley, we've mean, I would like to think we've hit bottom and we're done and we're starting to
if
settle,
we're not
because
near bottom, we should be very, very close.
Yes.
If our current inventories or trend as far as inventories are concerned are any indication, and there's no quote-unquote backlog that is just waiting to come crashing on our heads, we are near the end.
Well, and that being said, I think that there is a great opportunity for those folks out there, if they are considering that short sale or having to look at evaluating that jumbo. Now is a good time to be doing that because we have buyers out there.
Well, and here's another thing, too. We keep talking about how low interest rates are. Think about the fact that if you're close to being able to do that jumbo house that you want to buy,
Now's the time
to do it because
Yeah.
it's more affordable.
Yeah.
Oh, sure. Most
Absolutely.
definitely. And rates are, my gosh, at a 40-year low. And it
crazy.
seems like they just keep getting better. We keep getting an email, Fannie Mae,
Rate reduction,
last
price
week.
improvement.
Yeah, exactly.
I scream when I hear those, but
Yeah.
So, Timber, let's talk real quick. Those folks, Michelle, you just touched on it, those folks that may have purchased their home 2004, 5, 6, 7, 8, even, or maybe in today's market, they purchased it 2 years ago and purchased it for $625, and now, put, let's see here, $120,000, $130,000 down. And now they find themselves in a predicament where it is not worth $625 anymore. And maybe it's worth way, way less than what they actually owe. In today's market, what type of solutions are there for those folks? I know it's a loaded
Can I
question.
leave?
He's
He's like, I want out.
no,
Don't try to tag this on me. It's not my fault.
I think probably first and foremost is just to sit down with either your trusted financial advisor, your real estate agent, or someone like myself, and take a look at the whole picture and see what we've got to offer. Because there is some refinancing available for that jumbo market, but it is a small sliver of the pie.
Sliver, I think that pretty much sums it up. Right. First and foremost, as we've talked in the past, know where you're at. I totally and completely agree, Tim. Sit down with a trusted advisor, someone that is in the industry. Michelle would be happy to do it. Tim would be happy to help as well. To do a competitive market analysis, to really get a handle and wrap your arms around where you are at today from a valuation standpoint. Then determine,
what are my options?
Retail or wholesale, are there any options out there based upon what I owe and that number that you've given me as far as evaluation is concerned? And then lastly, if there isn't anything on the horizon for you, contact your servicer.
Yeah.
Contact your servicer, and I cannot stress that enough. Contact your servicer and find out from them. Because really, you're...
Well, and right now is the best time to do it with the lawsuit.
Sure.
Again, if there's going to be a reduction, if there's any options, they may be looking at it now.
What I don't know, and I would need to investigate this, but I would like to, I want to find out is if
is this for another show?
It could be, but in regards to the B of A and Chase customers that we were talking about earlier, let's take for an example if they offer those customers not just a rate reduction but a principal reduction.
Sure.
Okay. My question is that, and I didn't see it in the letter that was given to my client, was can they then go again and refinance that? Is there a prepayment penalty? Do they add it on the back? I mean, those are questions that I don't know. And
that's why it's so important for people to be calling and phoning and getting the details and getting some kind of documents that explain it.
Right. And I think a little bit, if someone like myself or, again, someone else that's experienced in the industry contacted the server and talked with the client, with the servicer, because the client's not going to know what LTV means.
No.
Not going to know what,
You're right.
I mean, for the most part.
You're right.
At least have somebody that can have the same language to communicate.
Who knows what
talking
those acronyms mean?
Yeah.
Right.
I
Can
know,
talk in those terms.
They're extremely boring, but
And seriously, to our listeners specifically, if you'd like us to kind of script that question, those questions for you when it comes time for speaking with your servicer, we'd be happy to help. Because really, that is the most important thing. Talk to your servicer once you've got those variables. Based upon a local real estate agent's estimate, my property is worth $525. Just so happens that I owe $540.
Right.
So what can you guys do to help me? And the difficult part is if you've made your payments on time and there is no hardship that you've experienced, you may be left out in the cold unless you just push the right button with that particular servicer.
right.
And the unfortunate thing also is, had a call in from a listener about three or four shows ago, and that particular listener said they had built a custom home up east of town, and they just owed about $465, and was asking the question, so, can I potentially, it was custom construction, they built a cabin up there, said, can I refinance? And the unfortunate thing, I said, well, let's just make sure that the mortgage is not owned by Fannie Mae and Freddie Mac. And sure enough, it was not. And I said, so here's the deal. Here's the script. This is what you asked for. Where's my part of the settlement? And let's roll from there.
Right.
And if you are fortunate that your mortgage is serviced by Bank of America, Wells Fargo, Citibank, Chase, or Ally, you may have a little greater leverage. Well, if you have any real estate or real estate financing related questions, or questions regarding the information that we cover here on the show, we would love to hear from you. Call us anytime on our off-air number at 800-979-3958, or check out our resources online. You can also listen to shows from the Real Estate Radio Network on YouTube by going to our website at reofresnohomes.com. Or, Michelle, you can just use press 4 keyword
KMJ, call Valleywide,
to get connected to us anytime. Exactly. Well, a big thank you to Michelle Pettiscavalli, my special guest host here in the studio with us this morning. Again, happy Memorial Day. Also, a big thank you to Tim O'Hare, mortgage advisor with Valleywide Homes.
Thank you. Always a pleasure to be here.
Always great to have you, buddy. Thanks for getting up so early. Not as early as those 4 a.m. shows that we used to do. Also, Johnny, big thank you to our producer, Johnny B, behind the mics. Johnny, you always make us sound so good. Again, our goal with the Real Estate Radio Network is to get you the timely and accurate truth about your local real estate market, so we can help bring you back home. Don't forget to tune into the Real Estate Radio Network next Sunday at 7 a.m. on 105.9, the FM KMJ. Local news, local talk. Make it a great day, Central Valley, and we will see you next week.
The preceding program was paid for by the Real Estate Radio Network.